Hey traders, John Howell here. Let's have a bit of a market update for you today. And there's a few things that I really want to show you that is actually quite interesting, and I think you're going to really like it. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Before I start guys, if you haven't done so yet, go click on that very first thing in the description, because you're going to get access to a free training that I did just recently. It goes to 90 minutes. But then also I'm going to send you a free trading course as well too. It goes over 5 phases, the biggest mistakes you're making, chart reading, trading systems, and a whole lot more as well too. If you need help guys, just go get that free trading course, okay? You can start to utilize that to help you get ahead in the markets. So caution is needed when it comes to these markets, okay? As you know, for the last week I've been expecting a bounce. All right, I've been expecting a bounce out of the markets, and we are getting that bounce. But caution is needed. Yes, we are getting a little bit of a bounce here right now. But the big thing we want to keep in mind is that the trend has not changed. And this is a really big thing. I've been expecting a bounce, and we're getting the bounce, but the trend has not changed. And we don't want to be thinking that this is definitely going to be the bottom. We need to wait for the market to tell us that things have changed. And as you can see from what's happening through here, you can see how this market has made a high, lower high, a bit of a lower high, and a bit of a lower high. And look at this here. So we can see that the market has come back down. And last week I did videos based off, there's a major support level here. Yes, there is a major level support level, and I'll get to that a bit later on. But remember guys, just because there's a major level of support doesn't mean the current market can't break through it, okay? What we're looking for is we need to make sure the market has changed trend. We need to make sure we're over that. If we see here, look at this here, the market ran down, create up, create a little lower high, came down, came back, little lower high, and look at the moving average. Look how strong, see how strong that is, it's down. That's actually a very strong momentum down, and now we've actually come back down, we're coming back up. So the really interesting thing that I was seeing right now is we may get some more rally, but for an uptrend to start, what is an uptrend? An uptrend is a higher low breaking past previous highs. So we would need to see something like this, and maybe even come back down and then start to do something like that. We would need to see this first. We'd need to see this pattern first before and if we are going to make some really significant moves to the upside. Okay, so yeah, we may get upside, but the sellers are still in control right now, and we need to see this first before we. So if people think, oh, the bottom's in before we see an upside, then it may be right. And this little small run was what I've been saying, because basically we get the fear and greed index massively oversold and stuff like that, or massive fear. So that's what we're seeing through there when it comes to that. And obviously this is the cash market. But if I go to the futures market, this is obviously the futures market. You can see here, but we're getting a strong moving average. So the really big key that I'm watching on this level here is the big line in the sand for us in the markets is right here. That's that big line in the sand. If we could start to get back above that, which is that 4,144, if we actually look at the cash market, not the futures, then you would see, okay, this would be that line in the sand would be around that sort of, yeah, 4,100. That 4,200 area is definitely a strong area in the markets when it comes to that level there. We can also see, looking at the Nasdaq as well too, and again, let's just bring up the futures here because it's a lot more cleaner. We can also see on the Nasdaq as well too that it definitely does have a strong level of support right through there, that level there. So again, on the futures, it's 13,000. So again, we could just rally back up, hit this area, and then have another move down. And that's what I was saying in yesterday's video, is that we need to see the buyers come in here strong. Otherwise, the sellers are going to knock it back down. And it's just the truth, right? Yes, I do see a major bottoming pattern here, but the market is the market. We could just be getting ready for another one of these, right? It may run up and then do this and then start to head back down again. And that's why I'm saying, again, I told you yesterday's video, we need the buyers to come in. We need the buyers to come in strong like this, something like this, and then come down, create a higher low, and then start to see an upward movement from there. Okay. So that's obviously always the big thing through there. Looking at the Russell as well too. Russell has had a movement down, but the Russell's actually not really even that strong yet anyway. You can see we've had a bit of a trend line coming down through there. And then we've also, if you look at from there to there as well too, we're coming up to that point right now as well too, which is also in line with the moving average, which is moving average strong means there's strong momentum on the downside. So we could be getting ready for a bit of a rejection point. There's a lot of resistance point here. We need to see the market change. Plus also there's a lot of, you can see this major level of support through the Russell, and that's around that 1,900 and sort of 40 area, 50 area. That's that major resistance over there. So we really, for the Russell to become potentially bullish again, we really need to see something like this, right? So something like, we maybe get something like that and then maybe come back down and then start to create a higher low. Remember guys, a downward trend is what? High, lower high, lower high. We're ripping right up right now. We could be getting ready for another lower high here. That's the case. So that's what we need to be aware of. And once again, my title of my video was, I need to see the buyers come in strong here. Otherwise the sellers are going to knock it down, because it's just rip it down. We may get this and then suddenly we do something like that again. So we can see that through there. Again, we need to see the higher low through there when it comes to that. Let's go have a look at the good old oil market. And the oil market right now has just been flat. Now, why has this all been flat? Here's something that I really want to teach you as a trader. Whenever the market has very strong moves for long times, the market think about the market as an energy field, right? And think about the market. If the market goes up, it's using a lot of energy, a lot of fuel, so to speak, for that market to go there. Imagine you were running up a big hill like this, and you're running, and this took you, I don't know, this actually took you quite a bit of time. What's going to happen is that you're going to come to a point in time where you get really exhausted and you're going to need a really big rest, right? And then that's what's happened. You're going to do what? You're not going to move. You're not going to go down. You're not going to go up. You might just rest, right? Before you go for another move. And that's what actually happens with the market. That's what we're getting right now with the stock market as well too overall. We had a very big move last year. And then suddenly now we're not doing much. Same thing for here. We've actually had a very big move up, capitulation. And now we're not doing much. We're just sideways. It's just basically, it's not up, it's not down, it's just sideways. There's really no one in control. So the market is resting / refueling to get ready to go for another move again when it comes to the oil market through there. Looking at gold, and gold right now, there's actually two main areas that I'm focusing on gold. When looking at my chart, you can see my chart overall here. But there's two main areas that I'm focusing on gold. There's obviously this blue line down the bottom here. That's that blue line is this point right here. You've got that sort of support level through there. And you can see all these bounces through there. So if we did actually have a flush down, there's probably going to be a lot of support through that level through there. But then also we have this other angle coming up through here as well too. So we're at that angle right now. And that angle is also this line through here, which was resistance. And then that starting point there as well too. So this actually could be a bit of support right now for the market. It's going to be really interesting to see what actually happens. But right now, the sellers have come in a lot harder than I originally thought, especially seeing what actually has happened to gold. Gold has just gotten thumped again, and it's actually had, again, much more stronger selling. I knew that the buyers weren't coming back in, especially when they failed. And then the trend changed. And this is where it's important, guys. If you're trading the markets, you must flow with the markets. High, low, high, higher low, but did it break past previous highs? Remember, it's a higher low, breaking past previous highs. That's telling you now we're in an upward trend. It didn't break past previous highs, did it? No, what happened is we rolled over, we made a lower low, and then as soon as we broke here, who's in control? We're now in what? We're now actually in a downward trend, right? We went from a higher low. Then we actually then made a lower high, and then we actually broke down. And that's the reason why the sellers have been in control now, because the market changed. We must flow with the markets If we are a trader, that is, okay? Investing is buy, hold, and see you in 2030 type thing, right? Same for silver as well too. Silver right now, very, very, very strong move down. You can see here once again, and this is where, once again, for you guys that have been watching me, you know that I'm actually not in silver myself. Low, high, higher low. I was waiting for it to what? I was waiting for the breakout. We didn't. We created this lower high, and then the sellers came in strong, and now we're actually breaking below all this support level through here. We need to see, once again, if the market, if we can't get like a break above here, if silver does something like this over the next week, that's not going to be good, right? Because then we're probably going to get something like this, and then we're going to start to see silver go for another move to the downside. That's just what the market is. It's not, and I think some people get cranky at stuff that I say, but I'm just reading what the market's telling me, right? It's just what it is. And then some people say, it's like, John, charts are farts and blah, 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 blah. You know, it's like, well, I am a chartist, and actually the charts, if you're a trader, you only can use if you're a trader, you only can use the charts, right? You can't actually use fundamentals to trade, because just because there's a really good earnings announcement, does that mean it's a buy? No, right? Successful trading is all about using the chart and utilizing patterns in the markets to trade the markets as well too, okay? And I was actually talking to someone yesterday about this, is that one thing I really want you to try to understand as well too is that actively trading, like day trading the markets, like I day trade the markets. What I mean by day trade is every day I look at the markets. Every day I'm actually doing the scans. Every day I'm looking at the markets. Every day I'm actively looking at the markets, okay? So, but the thing is I'm actively looking for my setup. I'm not looking to say, okay, well, it's at support level now, let me buy it. You know what I mean? Oh, well, there's a bit of there's this 50% Fibonacci level. Let me short it at it's like, no, okay? One thing, I was talking to a guy yesterday about this. I'm like, there's a very big myth out there. The biggest myth out there when it comes to the trading is that you need to be trading all the time. Like every day, if I'm in front of the computer, I'm looking for trades every single day so I can make money every single day, to make money every single week so I can replace my income. That's not how trading works. Long-term trading, like long-term successful trading. Now, we're talking trading here, guys. Trading is all that seeing a setup, taking a pattern, win-loss ratio, etc., right? Investing is buy, hold, and look at it 10 years. So within that, okay, within what is going on with that, that's probably one of the biggest downfalls that a lot of traders have in the markets, is that they have this thought that they need to be trading all the time. Especially like they open up the markets and they can't just sit there for a couple hours, watch the markets and not take a trade and then come back tomorrow and do it again. And this is where your biggest downfall, right? Then you start to overtrade, then you start to take a whole bunch of crap, and then you're going backwards, and then it's actually not really good. Again, that very first link in the description, guys, when you click on that, very first training you're going to get instant access to, the 90-minute training. You're going to learn from the secret number one, because there's 3 secrets in that training. The secret number one is really all about the biggest things that stopped me for like half a decade, that really slowed me down, because it was the way that I was thinking about thinking about the trading and thinking about the markets. That's not true. And one of the ways I was thinking was that because I'm looking at the markets now, I need to be taking a trade now. I need to be looking elite, and it's just not the case. It's really, 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 really simple, guys, or it's really important to know that trading and income from trading is like being an athlete, okay? Or let's actually say a UFC fighter, okay? Because I'm into the UFC. So let's actually say a UFC fighter. Trading is like being a UFC fighter, right? What happens with the UFC fighter? He spends months and months and months training, getting prepared for what? His payday. And then he does his fight. Then he goes for his fight. And then guess what happens? He gets paid his $500,000, $1 million, couple $1 million, whatever, right? That's when he gets paid. Well, trading is the same thing. Behind the mark, when the market's not live, or when you're not trading, you're doing your analysis, you're getting better at reading the charts, you're scanning the markets, you're looking for the trades, right? You're doing the pre-work, the pre-fight work. And then when the market is open, you're scanning the markets, you're looking at the markets, you're looking for good quality trades based off the system that you use. And And then guess what happens? After all that work, you might do a couple of months of all that work and waiting and watching and scanning and looking and waiting and watching and scanning and looking and waiting and watching and scanning. You may take 2 weeks, and then suddenly out of nowhere, boom, a trade appears. You take that trade on the stock market. You may even use options, and before you know it, you're up 200-300%. And it possibly 400-500%, and it might be a home run where you get 1,000% return on that thing, all because you were patient and you're waiting, watching and scanning, waiting, watching and scanning, waiting, watching and scanning, and then suddenly that's how you get lucky at the end. You may say, oh well, this UFC fighter made $3 million this year. Oh my goodness, that's so amazing. But then you look through his year and he only got paid 3 times. Now, I'm not saying that that's exactly what happened. You don't get paid 3 times with trading, but that's the mentality, right? The mentality is that sometimes the market is going to be quiet with my setup. I'm not going to get my setup today, or sometimes not this week, or sometimes not this month. I might go through a whole month with no trades. And then the next month, I might actually have a lot of trades and make really good money. See the differences there? This is the side of trading, guys, that if you actually want to be a good trader and actually do well out of trading, then it's important to try to master this side of waiting, watching, and scanning. But the foundations is, what are you actually looking for? Again, make sure you click on that link in the description now, guys. Click on it now, go register on the very first trading. I'll teach you my #1 trading setup that I use, okay? But then the important thing is building your confidence around it, and then waiting, watching, and scanning. But then step #1 is, what are you actually looking for in a high quality setup? What is it actually you're looking for? Not 4 or 5 things, no, one thing, one really powerful thing. And then secondly, it's like, once you know what you're looking for, you're waiting, you're watching, you're scanning. You're waiting, you're watching, you're scanning. You're waiting, you're watching, you're scanning. And then suddenly, guess what happens? Out of nowhere. And then suddenly, if you do that, and you take that, before you know it, at the end of the year, you're like, oh, I've just made 100 grand from trading. You know what I mean? Or I've just made $1 million from trading. But then you actually look at your entire year. You're like, oh, but I've only roughly around 60% of the months were active, and 40% there was actually some really quiet periods in there. Thank God I didn't actually trade at that time. You know what I mean? And so this is the biggest thing that actually stops you from actually moving forward from when it actually comes through there. So I hope this helps you out today, guys. I really wanted to finish off today with a bit more of a thing that's really going. If you actually want to do well out of trading, it has nothing to do with the Fed. It has nothing to do with inflation. Trading the market is all about using charts and chart patterns that give you probabilities in the markets. And then from that, you can start to do really, 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 really well. Okay. And again, the very first thing in the description, guys, click on that. But the one thing I do say is this as well too, depending on what type of system you use, you must understand this, that the higher the win-loss ratio for the system, like the system that I trade is a very high win-loss ratio, the less trades you're going to get, right? Because it's more precise. It's a sniper approach. But the lower the win-loss ratio, then the more trades you're going to have, but if you have like what I trade is over a 90% success rate. Over a 90% success rate, but there's not a lot of trades. What I mean by there's not a trade is I'm not like trading every single day, right? Some weeks there's no trades, some weeks there is. So, but what happens is this, is that if you trade a trading system that has a 60% win-loss ratio, what you must understand about the 60% win-loss ratio is you can have 2, 3, maybe even 4 losses in a row and it be still part of the big picture, right? You may take 20 trades and then you're like, oh, I've just had 4 losses in a row, but then it's followed by 6 wins in a row. You know what I mean? Or you might have 10 wins in a row, followed by 3 losses in a row, followed by 2 losses, you know what I mean? Like stuff like that. That's a big thing about that when it comes to your trading that you must accept and understand about going into what type of a system you're trading. The lower the win-loss ratio, the more losses you're going to have, the more losses you need to be able to, you need to be able to handle as well too. For me personally, I don't like to have a lot of losses. So therefore, I like to trade a system where I'm not trading a lot, but I'm trading high probability, which gives me the confidence to put more money on, which helps me actually to make more money out of the markets overall as well too. So there we go, traders. Click on that link in the description below, and I'll see you in the next video.